Hello there and welcome back to Dukascopy TV. Well, it has been a busy week with central bank rate decisions, PMI results and also the NFP report due to be released later today. But what has been moving and shaking the market and how have the currencies been coping? Here to discuss with me is Mourtaza Asad-Syed. Mourtaza, thank you very much for coming in.
Good morning.
Now, if we're looking at the week as a bit of an overview, we'll start with, we had the BOE and the ECB giving out their rate decisions. Unsurprisingly, no changes there, but as always, it's the meetings and the question and answer afterwards which we get the real interesting stuff, the details. So the Bank of England, first of all, was deemed a little bit more dovish than was perhaps expected, but what would you make of these two different meetings and what came out of them?
I think what was interesting is that after the Fed came up with a slightly hawkish bias, or at least I would say a speech on being a little bit less easing than before, Europeans really came out and say we're not going to follow with the US policy. They really distanced themselves. That's how we feel the message was carried by the two central bankers, both in England and in Frankfurt. The idea is that usually the Fed is being followed a quarter or two by Europeans, including the English, and this time they really wanted to mention that it's not going to be this way. Markets should not expect the usual sequence of normalization of policy as in previous cycle, especially for the Eurozone, where the issues are very different, and the cycle in terms of business cycle where we are in the Eurozone is totally different. And what also interesting is the way Draghi mentioned guidance in a much more explicit way than Mr. Trichet was doing previously, with like buzzword was so hard to define or to understand. Draghi started to have a more, I would say, Anglo-Saxon approach of being very transparent and giving guidance to the market, which means that his whole speech, his whole stance is about trying to manage expectation, to show what he's doing, and he wants to show that he's not going to follow the US route. And it's about being easy, having low inflation expectation for Eurozone, and very aware of the difficult situation the European countries are going through.
Certainly recognising the risks there, but in terms of the currency, how do you think? So
here in the currency, clearly we can see on the chart the euro weakened, or I would say when you look at the pound, the dollar was strengthened over the last week and over even the last few months. There is a clear tendency for the dollar to strengthen against most currencies. I would say every currencies, and over the last week it has also be against the euro, which was keeping its trend for last few days, surprisingly. So now with Draghi opening the door, or being very explicit, the euro has opened the door for further weakness.
As you said, this forward guidance, this an extended period of time, the buzzwords, the buzz phrases which have come out of the meeting. But in terms of looking at how the euro is playing against the Swiss franc, if you like, the Swiss franc had weakened against the euro, that the crisis fears had dissipated over the recent weeks. However, in terms of moving forward, it's still overvalued. So with these different buzz phrases that we're getting from the ECB and with the cap remaining from the SNB, how are you seeing this playing out? What is your ideas?
So our understanding first is the strength of the euro against the Swiss franc over the last few weeks has been, I would say, artificial, in the sense that there was repatriation of a lot of carry trade outside Europe and the Eurozone into emerging market that came back to Europe. So it strengthened the euro and maintained the euro against also the dollar. Now, really, what we have a sequence of events outside this flow issue is the weakening of safe haven assets, and I think the key change in paradigm was the drop in the gold price. Gold price drop in the early of this year signaled all the decline of the safe haven. Then it came with the US Treasury, and we're very afraid that it would come into the Swiss franc. And the Swiss franc has weakened against the dollar, mostly because of the strengthening of the dollar. But now we're afraid that the Swiss franc would even weaken against the euro, and 128, 130 is very probable by the end of the year. there is a withdrawal by the market of the premium associated with safe haven, and you mentioned it. The Swiss franc is expensive. It has been sustained by positive real interest rates. Those also are dissipating. There is less and less deflation in the Swiss economy, and also there is more and more disinflation and possibly deflation in the Eurozone. So a competition in terms of real rates now turns into an appreciation of the euro versus the Swiss franc. So we're very worried about position in Swiss francs that could weaken as fast as what happened on the gold market.
Gold as well. Certainly some real concerns there. But if we turn, we've talked about all the US dollar and how it's relative to everything, but in terms of yesterday was the holiday, the public holiday, not much, no data released obviously there, kind of the calm before the storm, given that we have the NFPs expected today, and the market is sort of accounting for a slight dip, it would seem. But with all this in mind, what are you expecting and how is your outlook for the dollar?
I would start by the job market report. The job report is like the key figure, or the key economic report for the markets. I would tend to be cautious about that one, because over years the accuracy of the report has really declined a lot, and we'll see major revisions coming up, especially as this is the annual revision, and they are increasingly sizable. It's surprising how the BLS, which are building those data, has not managed to improve the accuracy of this number, which is the key report, the key number for the Fed.
Exactly.
And so they have explicitly mentioned a target on the job market, and looking at the detail, the job report is, I would say, of very poor accuracy and very poor quality. So yes, we can expect about a number about 180 job creation, a decline in the unemployment rate, but this has to be taken with a lot of caution on a very short-term basis. What is really important is the trend, and the trend is of further improvement. On the currency, of course, the market might react. We'll see, depending on the number, a strong job report, a strengthening of the dollar. That would be the usual link, and it's a very legitimate one. But regardless, I would say to the short term, we expect the dollar to strengthen, because the trend is what matters. And as I said, the trend for unemployment for us is that if there is a bias to the report, it's towards better numbers than what is going to be reported. We think the situation is in fact better than what the report can show, mostly because they survey large enterprises, large companies, and the jobs are created in small ones and by single entrepreneurs. So it's very likely there is in fact a better economy in the US than what the job figures are showing.
Well, it's certainly a very interesting point, and we will see what that report gives us to read, to digest later on. But thank you so much for sharing your insights and perspective with us today, Mourtaza.
Thank you.
Thank you. Well, that's all from Mourtaza and myself for the moment. Click back to Dukascopy TV for the next exclusive interview. Goodbye for now.